Well, explain how you're thinking about this, Jonathan. Were you planning to pursue an IPO this year, or because of the SPAC mania, if you will, did you decide that this was a more opportune time to take advantage of that to raise more capital?
Well, first off, Andrew, I didn't know Steve was wearing the red AppHarvest flannel. I got the green AppHarvest flannel on, so we didn't talk this morning, but we got our matching shirts. So, no, we knew we wanted to bring transparency to agriculture from day one, and the best way to do that is to be a publicly traded company and have that institutional rigor of being operating at the highest level. And what we've seen in the middle of COVID is that our country has massive food security issues where we've pushed most of our fruit and vegetable production out of the U.S. It's being imported from Mexico, almost 3,000 miles on a truck. And for us, over the summer, we had many political leaders reaching out to us, expressing concerns. We have our governor here in Kentucky that talked to us about his concerns of getting fresh food on the grocery store shelves. So we can use technology, we can build infrastructure, we can grow a fruit and vegetable with 90% less water, get 30 times more yield per acre, and get the harsh chemicals out. And run completely on recycled rainwater. And Steve talked about, we're doing it here in eastern Kentucky where we can get to 70% of the U.S.
What are you going to use the capital that you've just raised? What are you going to use that for?
We're going to build really big fast, Andrew. We've been able to do this in the middle of a global pandemic where I'm standing in the middle of a 2.8 million square foot facility that's nearly 50 football fields under glass. Massive structure. Coming out of COVID, we're ready to hit the ground running, and we're going to build. Our goal is to build 12 facilities by 2025. So we want to bring fruit and vegetable production back to the U.S. and put it indoors here in Central Appalachia.
Hey, Steve, I want to ask you something about the markets and SPACs in particular, which is the retail investor seems to be assigning a significantly higher value oftentimes to some of these companies than the quote unquote private investors, often considered the smartest money in the world, have been assigning. And I'm grappling with that. Why is that? Is the quote unquote smart money not that smart? Meaning, has everybody in the private VC and private equity space been wrong and undervaluing their own assets? Or are the retail guys smarter than them? What's happening here?
Well, I think it's a little bit different. Revolution Growth has taken a couple of companies public last year. DraftKings, which has done quite well. More recently, we announced Talkspace in the telehealth space. We also did a traditional IPO for big commerce. One of the things I like about the SPACs is it gives retail investors an opportunity to invest in these growth companies, the innovation economy. When AOL went public in 1992, our market value was $70 million. We raised $10 million in our IPO. 8 years later, it went from $70 million to $160 billion. And that money was in the pocket mostly of retail investors. More recently, when companies were going public later, Airbnb went public as almost $100 billion valuation. It didn't give those retail investors a chance. So I think SPACs are an important way to allow retail investors to participate and get into some of these companies like AppHarvest, as opposed to waiting until the values are much, much higher.
Shepard Smith here. Thanks for watching CNBC on YouTube.